market, supported by potential listing of the Dangote refinery, which he said could dip in market liquidity and attract domestic and foreign portfolio inflows. Noting that GDP growth is projected between 4.0 and 4.5% in 2026, supported by continued moderation in inflation and strong non-oil sector performance. Dr. Yusuf said that moderating inflation should strengthen domestic demand and create room for gradual monetary easing, potentially lowering interest rates and stimulating private investment. He said, and I quote, "The year 2025 marks a significant turning point in Nigeria's macroeconomic trajectory following the turbulence associated with any phase of reforms. Exchange rate stability emerged as the most visible achievement, with Naira largely trading within 1,400 to 1,500 Naira to a dollar." My guest to start the year with us on Business Nigeria today is a friend of the house, Mr. Kenneth Erikume. He is a partner, tax reporting and strategy with PricewaterhouseCoopers. He joins me this afternoon to have this conversation. Thank you so much. Good afternoon, Mr. Erikume. It's good to see you. A happy new year to you.
Good afternoon, Tolu. Happy new year to you as well.
Thank you so very much for being with us on the show today. Well, my introduction was so clear. Many are worried. Many have expressed fear, if I can use that word, anxiety, resistance in whatever way you talk about it, looking at the implementation of the tax laws. Let's start with it. I think that is the biggest story everywhere today. Everyone wants to know what will happen either to their accounts, either to their finances, and all of that. But take us through this development, considering the development, the unfolding. We've heard a lot about this, a duplicated copy, something happened to, something was altered, and all of this. But government says, we are going ahead to implement this document to the latter. Where do you stand with regards to all of this?
Yeah, thank you very much, Tolu. Speaking to lawyers, I have reached a very valid landing around the conclusions that were reached in terms of proceeding with the 1st January implementation. I believe, based on several advice I've received from a legal perspective, that it was the right thing to do. Because from a legislative process perspective, once the National Assembly has submitted a bill to the president for assent, and the president has signed and assented to that law or that bill, it automatically becomes an act and a law, irrespective of whether it has been published or not published. So the process of gazetting is a process through which something that has become law is then communicated to the general public and stakeholders. So it is the final piece of the process, but it doesn't bring into being an act in itself. It is, an official gazette or a publishing of the document for the consumption of the public. So it became law immediately the president signed. So there was no way the government would have gone back to revisit it and say, well, from an implementation perspective, it hasn't happened or will not happen. Do not forget that 2 of the laws were already in effect legally from an earlier date, I think from 1st of July 2025 or thereabouts. So to that extent, I am in alignment with the conclusion. The question, however, is in terms of the process, can it be improved? And that would depend largely on the findings of the National Assembly after they have done their investigation. But if I were to speak with an outside-in view around the process and some of the things which I've heard around the manual compilation, of the versions, the harmonization process, and eventually the gazetting, I think a bit of investment needs to go into the automation of that process, as is done in other jurisdictions where they have similar approaches. So things cannot be done manual without expecting some human error, and assuming that the final version will be, would be without any difference or alteration. Because when you have human beings, there would always be that potential for error. In any event, I've seen the final, Gazette as well. And it still has things like typos, for example. Okay. So you can't totally rule that off, irrespective of the process, except we go into automation. And there are instances where people have overlaid that with, technological advancements such as AI, that does proofreading that can then determine where differences are. So, if you were to ask me for an advice, that would be my advice around the process.
Now, go ahead.
Now, the question around what should people expect, and there's a lot of opinion out there and a lot of thoughts, controversies around how the laws would be applied to bank accounts, to transactions, and things like that.
Yes, misinformation in some cases. Go ahead.
Misinformation in many cases as well.
Yeah.
But let me say this. I think there are two important bits of this, right? One of it is the fact that for the first time in a long time, and I must say this is one of the positive outcomes of some of these conversations, is that tax is now an issue that is discussed at a national level by everybody, whether it is by social media influencers, to people in government, to people in the private sector. Everybody's interested and everybody's having a conversation. Now, government has to leverage off that and make the full, take the full optimization and benefit from that event by ensuring that they take this event as an opportunity for cultural integration of a tax culture into the fabric of Nigerian citizens. So that's the first component. The second component is really a lot of people don't know a lot about tax normally, right? And our compliance level is not as high as it should be. And one of the reasons for the reforms. Our tax to GDP ratio, a lot of people have said is 13%. Me, I believe is in the region of 10% based on my calculation. Yeah, is below, way below our neighbors in Ghana. Significantly below countries that we, from a regional perspective, we are competing with, for example, Kenya and South Africa. And therefore, it shows you that government is not collecting as much as they should. So there is, if I were to do a high-level diagnostics of the situation, there is a lot of, base that has not been captured into the tax net, largely due to lack of the tax culture and some bits around, transparency and the government having the data required to do proper tax administration. Now, that's the second component that I believe needs to be dealt with. A lot of people that feel the pressure, and I'm not saying all, but a lot of the people feeling the pressure around the controversy and so on and so forth are those who previously may not have been largely compliant with their tax affairs in the past. So you will see a bit of friction around things like having visibility over transactions in my bank account. Of course, there is the confidentiality aspect of that, which government needs to take care of with the data protections and all that. But and obviously the security aspect as well, if you have your transactions flying here and there. But there is also the important component around, should you really be worried if government knows about your transaction if you were compliant in the first place? So those are some of the ramifications I think we need to unpack. And of course, people come up with all sorts of fear-mongering and misinformation, which then leads people to begin to take views that may not be exactly accurate. Now, having said that, are there adverse provisions in the tax laws that could adversely impact business? There are a few here and there. But when you look at the law holistically, I think overall, the direction which government is going is positive. And we need to appreciate that there's no perfect legislation, more so tax legislation. Because one of the things that tax does is takes money that has been hard earned and gives it to government. And the trust, equation becomes very critical, right? Because, if you've spent all your effort to generate money and then government is taking 25%, government has to use it, for the purpose which it is intended for.
Indeed.
Otherwise, people do not feel the need. And people have spoken about this chicken and egg situation in the past. Should government collect revenue first or create infrastructure first? But that chicken and egg conversation is gone. We now need to engage and say, well, at this point, implementation has started happening. Government has to use the funds for the purpose it's intended for.
Mr. Rikume, I think the issue of trust comes in considering your submission here now. People's trust for government is also something that they need to know that when these taxes are paid, they are used, for social amenities to address challenges that we face day to day. And I must also ask you, because the committee has been doing a lot going around. Mr. Taiwo Idile was on a sister show today on our program, on our television station, I beg your pardon, to explain again. And, there's been this explanation all around. Can you help us also shed more light on the pro-welfare provisions of this law? I went through some of them, like the exemption of low-income earners, VAT on basic needs and all of that. Do you think this is being communicated enough to Nigerians to understand the pro-welfare provisions of this act, this law?
Yeah, unfortunately, it's a difficult one to explain to a common man, in quotes. I'm a tax professional. So if Mr. Oyedele explains to me, I get it and I understand it. So you would have noticed on the airwaves, social media, and in different forums that tax professionals and professionals generally that are in that space, maybe economists, but largely tax professionals and lawyers, many of them have not been overly critical of the provisions of the tax reforms, right? And the reason why is because they are able to understand the explanations that are being given by government, but not everybody is able to appreciate it. Now, let me start, by unpacking some of the pro-welfare provisions. The first one is for individuals earning less than 25 million naira per annum. Their personal income tax or payee, if they are employees, will drop, right? So their PIT will be less compared to what they were paying in 2025. It is people earning above 25 million, when you do the simulation with the new tax rates, that will pay more, and it continues to grow, especially if your income or your profits is more than 50 million, where you're now taxed at the 25% tax rate. So that is one provision that caters for the less privileged. You then go into the space of, corporate tax, where you have players in the small and medium enterprise space. Anyone whose revenue is 50 million and below is completely exempted from corporate tax on their profits. So whether they make a profit or not, from that 50 million naira revenue, right? Sorry, 100 million naira revenue, my apologies, because, we're now looking at the old legislation, the gazetted version, the 100 million mark. So if the corporate entity earns revenue of 100 million naira or less, the profits are fully exempted from corporate tax. And from a VAT perspective, they are not supposed to charge VAT on their invoices to customers. So you see there again that many small and medium enterprises, as long as they corporatize, will be below the threshold and they will not have to pay tax on the income or profits that they make. Now, those are what we call direct taxes, taxes on income and profits. There's also indirect tax, which is, the taxes on transactions, right? So VAT in particular. Now, what government has done with the VAT conversation is to zero rate, and it's not an exemption. What we had before was an exemption. With an exemption, the VAT you're charged on your costs is an absolute cost. For zero rating of essentials, whether it is education, whether it is pharmaceuticals or health, and so on and so forth, the VAT they pay on their costs is recovered from government. So not only do they charge VAT at zero on their own invoice to customers, the VAT they bear on their costs is recoverable from government. So government has to pay them back. And it's the same situation as well with businesses generally, because now there's an expanded scope for people to claim back the VAT on their costs. So businesses generally, and if I take my organization that I work for as an example, it's going to improve margins significantly because my costs are going to reduce maximum by 7.5%, but probably around by 5% because I'm going to be able to recover the VAT. So when you look at the revenue of government, if everything remains constant, if you assume that government is not going to improve the rate of collection of VAT, as an example, comparing 2025 with 2026, government's VAT revenue is supposed to drop significantly because companies' margins would improve because they're going to be able to recover the input VAT. And I think from an inflationary perspective, it's going to help, right? I know last year we enjoyed or benefited from the base effect, number one, as well as the strengthening of the Naira, number two, which therefore meant that inflation was curbed significantly. But even into the future, all things being equal, the benefits that businesses are going to get from the ability to claim input VAT on their costs is going to create more relief for them and maybe not, would reduce the urge to increase price, which would then manage inflation to a large extent. So having said that, those are, the essential provisions, supporting the welfare aspect of the policy. There are some industries that have highlighted some things that they are particularly worried about. For example, the tax on capital gains, which the government has said they will pay attention to. For the private equity firms, as well as those who invest in the Nigerian stock market, that obviously is a concern, which government is obviously saying they would take time to see how they address it as well. But, overall, like I said, there's no perfect tax legislation, but bits and pieces. When you look at it overall, I think it's a net positive from my perspective. I've done the impact assessment for several companies, both clients of our firm and others, and I've looked at the fact that overall for many of them, I would say 80 to 90% of the impact assessments I've done, from a corporate perspective, it's more positive than negative.
Indeed. That's how I would say. Well, if we can, let's wrap this up in 2 minutes. Again, the impact on macro and the micro. You understand that argument, that many say that private businesses, the big boys, seems to be enjoying some of these policies. Yes, that's what we hear when we ask the questions. Now, the big boys are doing very well, but what about the man on the street that wants food on his table, that wants, to run around daily activities? What would be the outlook for them in 2026?
I think the outlook is quite positive, and I heard you speak to the report from Dr. Muda Yusuf, and I thought that that was well thought through and presented as well. And I'm largely in alignment with some of the considerations in there that will see quite a bit of growth, or should see a bit of growth coming through into 2026. I know it is penultimate to an election year, but that could also and is also positive, because what that would mean is that, especially for administrations that wants to show legacy or want to be able to show results leading into the election season, that there's going to be a lot of projects. Hopefully those projects are things that would be able to give the right return to government in a positive way. And again, you see that the exchange rate has been largely stable overall, net appreciation in 2025. And I think that, some of the outcomes we've seen, for example, the Dangote refinery as an example, the NNPC and the oil and gas industry also stepping up in terms of production. If we sustain those things and continue to improve with all the planned investments in the oil and gas industry, I think that we would begin to see some growth and appreciation, which would be quite positive. And I think that overall the outlook would be positive. Inflation should be largely under control, with all these factors being considered, and even some of the benefits which I highlighted coming through from the tax reforms. Now, yes, the large corporates seem to be fine, but I've highlighted things that will benefit the common man.
Indeed, you have.
25 million and below.
Yeah.
At an individual level, you'll be exempt. Corporate, 100 million and below, you'll be exempt. So if you have a concern, it will be around the transparency measures, that government will now have more visibility over transactions, and transactions which were not being reported before. But everybody needs to contribute their fair share. If you look at the analysis, and I'll close with this, the analysis of many state tax authorities, a lot of their income is largely driven from payee, which is, the taxes that you raise from employees. In many countries, like the countries which I highlighted, South Africa, Kenya, the large revenue from a personal income tax perspective is from direct assessment, because the employers would be able to pay more than the employees. And if you use Pareto's principle, 80% of the taxes should really be coming from 20% of the population. But many of the states have been historically lazy around tax administration around high net worth individuals, and sometimes lacking the data to do effective tax administration.
Mr. Kenneth Erikume, I must thank you so much. It's good to start the full week of the new year with you on Business Nigeria. Mr. Kenneth is the partner, tax reporting and strategy with PricewaterhouseCoopers. Do have a great year and a profitable one.